Hi, Niro here from Investment Rise. A common question I'm often asked is, Niro, where do I buy? I've spoken about this in previous videos, but today what I want to look at is how the answer to that question depends on when you're buying. You see, there's always a market that's growing in value, but the question is, when are you buying? And when you buy determines where you buy. Let's look at history to explain. So here we've got a graph here showing price movement of the Sydney market from 2000. So from 2000 to 2004, in other words, just after our Olympic Games, prices were on a vertical rise, going up to the stratosphere. Okay, people who bought property sort of in 2000, 2001 or before made some great gains. However, in 2004, the market ran out of puff. Just stalled itself, okay? And then from 2004 to essentially 2011, 2012, it was almost as flat as a tack. Okay, it went down in about 2006 slightly, then it went up slightly in 2009, but there was certainly no massive gains from a capital growth perspective. And then in 2012, roundabout, prices started to kick off again, and we've had some huge price growth from 2012 to 2016 in the Sydney and Melbourne markets. And so a lot of people are saying, well, should we keep investing? I mean, the prices are so high, but let's just say you can still afford them. Should you be investing in Sydney and Melbourne? Unfortunately, that answer comes down to how strategic you are. If you're a do-it-yourself investor, or dare I say it, a novice investor, most novice investors think like this. They go, prices have risen so much over the last few years. I've seen the growth, I've seen how much money people have made, now I want to get in. Well, that's like the people who bought in 2004 to about 2006. All right, they saw the growth in Sydney and said, oh, look how much prices have risen, look how much money people have made, now I need to go in because I've seen the evidence happening. And they jump in. Yet, unfortunately, when I met people in around about 2010 to 2011 who bought in Sydney, they're the ones who told me that property investing didn't work because they bought here after all the growth had happened. And the worst case was, I know many people who bought just after 2003, 2004, and they sold in 2010, 2011 because they said, I've held this for 5, 6, 7 years, I'm not getting any growth, I'm going to sell out. So they bought after the growth happened, and then they sold before the next growth happened. So now we've studied what's happened the last few years, we come to 2016. Now, 2016, looking back, we've had some amazing growth, but the market is now poised after a huge up run sort of here, where some areas are starting to go flat, some areas a little bit backwards, other areas still have a little bit left in it, but essentially 2016, the Sydney market is poised where it was in 2004. We're ready for our next several years of flatlining. So if you are the kind of investor who says, look at how much prices have risen in a suburb in Sydney, or look at how much they've risen in the suburb in Melbourne, and now is the time to go in. If you go in here, it's like you going in here in 2004. You're going to have to expect some years of flatline. Now, again, if you hold long enough, if you bought in 2004, held for 7, 8 years of zero growth, and kept holding, you would have made your growth. But you had 8 years of pain, missing out. Meanwhile, other markets were growing. And I believe what's going to happen in the Sydney and Melbourne market is history that's happened here is going to repeat itself. Where, as I said, we're going to have several years of blub, 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 essentially next to no growth. But other markets are poised to grow in value. So just like here in Sydney, up until from 2004 to 2012, next to no growth. And so 2010, 2011, a lot of people are saying, oh, maybe you should get out of the Sydney market. That was a novice investor because of all the flatlining. The professional investor, however, was getting in. The person who was working with someone who does this full time was actually getting into Sydney. Right now, there's a very special market that's poised to do this, but up here. So in other words, what I'm saying is there's markets that have been flat now for the last few years. Oops, and that pen won't work, so let's try a different one. Let's try red. The market has been flat for a few years, but it's now just starting to turn. And if you base your property investing decisions just on what's happened over the last few years, and you go, the last few years have been flat, so therefore it's going to continue to be flat, you may be disappointed because you're going to miss out on opportunities. If you base your decisions on saying the last few years have been great, so it's going to continue, I'm afraid history is against you. Price points are against you. Rental returns are against you. So this is why for me, Sydney and Melbourne poised up here. When I look at everything, I look at property investing cycles, I am saying you don't need to necessarily sell out if you've got property. You probably had some great equity, but now is not the time to be entering those markets. So what market is poised and to go like this and to set off in a really good upswing? Well, if you've been watching my videos, you know it's certain key areas of southeast Queensland, in and around Brisbane, within about a 40-minute radius. Now, the key areas it comes down to your scenario, and this is what we do advise our clients. But if you take nothing away from this video, please understand that there are property investing cycles, understanding how history works, understanding how money moves, understanding where the people are moving to. If you can understand the core fundamentals of property investing and you base your decisions on what's going to happen in the future, because remember, when you buy an investment property, what you're getting is the future growth. Whatever's happened in the past is gone. It's gone somewhere else. And even someone like John McGrath recently came out and said that anyone who invests in Sydney and the Melbourne markets have to accept that most of the growth is behind them. They're going to have a few years of flatlining, and then they'll get growth again, just like people that bought in 2005 did. But wouldn't it have been better for you if you were buying in 2005, rather than buying, saying, in a flat market, you were buying in a growing market? You could then come back, made some gain, and then bought again in Sydney. Well, that's what's possible for you right now. If you start understanding this and you want some assistance with, okay, this is great, I understand, I want to buy in the next growth market, but exactly where, how, what kind of property? Then hit us up, click the link below, send us a request with your contact details, and we'll be in touch. Otherwise, leave us a comment below this video and let me know what you think of understanding how history works, how price growth has been in Australia, and whether you agree. I'd love to hear from you. Bye for now.